All right, I think it's time to do another quick recap on gold. I've gone over this in some of my previous videos. Um, the bullion banks, I've said this before, they're heavily short. They're in jeopardy of getting caught in a short squeeze. They tried desperately to defend this 50-day moving average, prevent gold from getting above that. Once it did, they were at risk of that short squeeze starting. They could not hold gold below that level. Then the next significant resistance zone was this area right here around 1520 to 1525. They attacked it several times here, trying to prevent it from moving above that. They failed yesterday to hold that, and then with the troubles in the Middle East yesterday, gold has taken off, and we've broken through this minor resistance zone. The next resistance zone here will be the recent highs. I've also noted many times that the first daily cycle will often uh, recover all of the losses during the intermediate cycle decline, and that appears to be going to happen here. We haven't reached a daily cycle top. My feeling is that gold will probably push a little bit above this top. That'll bring in the breakout buyers. This is kind of how retail traders trade. They've been very fearful the whole way, and they're still fearful here. I would say a lot of retail traders, maybe even most, still have not pulled the trigger on gold. They missed the initial surge, and then when they do that, they wait for a pullback to buy. But of course, when any pullback comes, that it doesn't look like a pullback in real time. It looks like the market's turning back down. So even though their plan is to buy on a pullback, they don't actually pull the trigger, and that's just what keeps this bid in the market for weeks and weeks, and actually several months. Is you've got these late dumb money type traders that are just playing this completely wrong. And then what's most likely, I think, going to happen is we'll get a breakout above this peak. That'll be the all clear sign for the retail traders, the dumb money traders, to start buying. And of course, that's about the point at which smart money will take some profits on their positions, because they've been long since the bottom. They'll take some profits, and then the breakout won't be sustained, and we'll get a pullback into a daily cycle low. So the retail traders that buy this breakout will then get stopped out, because the market won't take off and run like they were anticipating. They will immediately take a drawdown on their position, and they'll stop out for a loss. And this kind of behavior will continue for most of the rally. Um, they buy high, and then they sell low. So they find a way, they manufacture a way to lose money being long in an intermediate rally. So here's the mindset. During the early part of an intermediate advance, which we are still in, traders are still nervous. The memory of this 3-month decline, correction, and this sideways chop is still very vivid, and they are still nervous that this could turn and go back down. So I'm already seeing this. Any little down day or attack by the bullion banks knocks these traders out of their position. They don't want to give back any of the gains that they've made up to this point. So they're very nervous. They're very quick to take profits. And then what happens is, like I said, I'm pretty positive the banks are already caught in a short squeeze, so that there really isn't any significant pullback. So these people that take profits early, expecting to be able to buy back at a lower level, they just get left behind, and then they end up having to chase. So they're missing chunks of the rally by trying to outsmart the rally. And this mentality of taking profits too early and chasing, this usually continues for 2 to 3 months, and then at around 2.5 to 3 months, pretty much everyone becomes conditioned. They're convinced that the rally is sustainable, and at that point the mentality flips, and the traders are anxious to buy any little dip, because at that point they're not worried about losing any profits. They're worried about potentially missing some gains. And at that point, then we're getting close to the intermediate top. And that's the point at which you want to decide where you need to control greed, be happy with your profits, lock it up, and then wait for the next intermediate correction. But we're still early in this cycle, and so we're still in the phase where traders are nervous. They're taking profits way too quickly and having to chase. We've probably got another month and a half at least before we transition into the phase where traders become more worried about missing potential gains rather than losing potential profits.